Hello everyone, and welcome to TBR's webinar, Future Storage, the Rise of Flash and the Decline of Disk. I'm Justin Sargent and I'm hosting today's webinar. With industry-leading performance in speed and efficiency and the ability to be infused at the heart of workload processing, flash storage solutions have significant advantages over traditional disk storage implementations for data-centric applications requiring very low latency. Customers increasingly deploy flash storage to improve business outcomes as workloads such as in-memory database processing and real-time analytics queries become mission-critical. While Tier 1 storage OEMs, including EMC and IBM, are investing and marketing heavily to build their brands in the flash segment, niche pure plays such as Nimble Storage, Pure Storage, and Gridstore are capitalizing on the disruption of disk, finding avenues to storage market share growth. Insights from today's presentations are highlights from our special report piece of the same name, Future Storage, Rise of Flash and Decline of Disk. If you have not yet read this piece and would like to learn more, either reach out to me or one of the analysts directly after the presentation or check it out on our website at www.tbri.com. Now, before we begin the presentation, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others we posted. Second, we'd like to hear your thoughts and opinions on what we're presenting today. Please send any questions to the Q&A function, and we will address them at the end of the presentation. Third, we'll be sending out these slides and the recording link from today's presentation within 24 hours of the conclusion of the webinar. You can also find the slides as well as our other special reports, webinars, and commentaries at SlideShare at slideshare.net/TBR_market_insights. Now with that, let me introduce the analyst presenting today. Data center analyst Krista Macomber is a leading contributor to TBR's syndicated program and custom research and coverage on IT infrastructure, including servers, storage, and data center networking. In this role, she is the primary author of TBR quarterly reports covering Dell and EMC. She coordinates and is the lead author of TBR's quarterly data center benchmark and semi-annual cloud components benchmark reports and associated databases. And with that, let me hand this over to Krista.
All right, great. Thank you, Justin. Excuse me, and welcome, everyone. Today, we're going to take a look at the future of storage mediums. It certainly isn't a secret that disk storage is becoming commoditized and demand for flash storage is growing very fast. However, today we're going to take a look at where this demand and adoption is happening and the impact that it will have on the disk market. To set the stage, customers today are facing a number of challenges that disk solutions simply can't address. There are heightened demands on IT and business today. These IT and business face more demanding environments than ever before. And what we mean by that is that customers today need greater insights and faster insights as well. They need to know in real time where is customer demand heading so that they can react more quickly to these opportunities. Not only are customers having to react more quickly on a more limited time frame, but they're also having to do this on IT budgets that are relatively flat or even in many cases declining. Disk storage is simply too slow to be able to accommodate these workloads today, which is causing customers to begin to deploy flash solutions across their environments. They're turning to the speed and the efficiency of flash solutions to be able to increase their time to outcomes, to be able to have faster access to data, and also to be able to tier workloads more effectively. The market is moving as a result of these customer needs, as well as a few other accelerants for demand of flash storage. The first accelerant here is that prices for flash solutions are declining, whereas before flash solutions were very expensive. Now they're becoming a little bit more palatable or manageable for customers to be able to deploy in their environments. We're also seeing that flash solutions have increasingly extended lifespans, in some cases even up to 10 years. So that's also helping customers to be able to see additional value from the perspective of TCO or ROI for flash solutions. And a third accelerant here is that as disk storage increasingly is not able to accommodate these growing workloads for customers, vendors are investing in solutions. They're building out their portfolios, so that's also helping to attract customers to flash solutions. Here at TBR, we have taken a look at the market for combined disk and flash storage. You can see here on the slide that the combined market for disk and flash storage, we believe, was about $28.6 billion in 2014, and we believe that that will grow to nearly $32 billion by 2018. These forecasts are from our semi-annual data center server and storage market forecast. As these dollars are shifting, and they are overall growing, we believe that flash storage will grow at nearly a 23% CAGR from 2014 to 2018, and that the flash market will rise to nearly $13.5 billion. On the disk side, we believe that revenue will decline at about a 5% CAGR over this time frame to nearly $18.1 billion. For vendors, in addition to having new revenue and profitability opportunities in the flash segment, we believe that they're shifting their portfolio and their go-to-market strategies to better emphasize flash solutions, also because the flash solutions are being deployed in more mission-critical environments compared to disk. So this is also an opportunity for vendors to ensure that they're top of mind for customers, to ensure that they're having engagements with customers that are very valuable and make them stickier from a long-term perspective. For all this opportunity, there's one thing to caution here, and that is commoditization. We've touched on disk becoming commoditized in part due to flash, but we believe that flash itself will also become commoditized as well, and perhaps even on a shorter time frame than the disk market as well. We already see vendors such as Infinio, for example, bringing to market software solutions that work to improve the cost effectiveness of solutions and beginning to try to abstract some of that functionality up to the software layer. For leading vendors, from a portfolio perspective, we believe that this means they should bring to market broader solutions that not only have innovation at the hardware layer, for example, working to improve flash capacity, which is overall a pain point with many of these solutions, but also investment in software such as intelligent data placement and data services such as data tiering and compression. We also believe that it means that these vendors will have to wrap these hardware and software solutions with services. For example, EMC offers planning and deployment services alongside with its flash solutions and sort of building on its base layer break-fix support to be able to go to market again with a solution that more holistically is able to address customers' requirements here. As we look at a lot of these workloads that flash solutions are being deployed to support, these are newer workloads for customers, so they're going to need more support in terms of figuring out how to best leverage flash and figuring out how to migrate their environment over to flash. So this does create a bigger opportunity for vendors on top of the hardware. From a go-to-market perspective, this focus on sort of workload optimized solutions will also be helpful. Messaging this will help the vendors to ensure the IT departments at their customers' organizations that they have that expertise that is needed to be able to support these workloads. But also, we touched a few minutes ago on the fact that flash is helping to solve not only IT problems, but also business problems as well. So the decision-making process will also involve line of business executives. And these line of business executives will be focused more on the business outcomes that they can achieve from the technologies. So for vendors, it'll be challenging. They'll have to sort of pivot their messaging across both of these spaces, but that ultimately we think will help to drive leadership and help to separate the leaders from the pack. We look at the landscape of flash vendors from two perspectives. The first, or from two camps. The first being the mainstream vendors such as EMC, NetApp, HP, Dell, that already have a strong presence in the storage market, primarily on the disk side. They have kind of that more holistic portfolio. And we also are looking at the niche vendors, so vendors such as, for example, Pure Storage, that have a portfolio very focused on flash storage. For the mainstream vendors, we believe that competing in the flash marketplace is primarily a means for them to protect their leadership. Overall, these vendors already have the presence in the industry, and they have a lot of cash to be able to invest in building out their flash portfolios and building go-to-market campaigns as well. And we believe that these vendors will overall position flash as more additive. So whereas the niche vendors will likely be more prone to position flash almost as the end-all be-all for customers' workloads, the mainstream vendors are likely to go to market with more of a balanced approach across disk and flash, and sort of talking about optimizing data and workloads across those two mediums. For the niche vendors, we believe that their big focus and their goal will, of course, be to continue to grow share. As flash disrupts the storage marketplace, these vendors, we believe, see an opportunity to grow market share themselves. And so they will target both greenfield opportunities, but also competitive displacements, things like that as well. And their key here, we believe, will be, of course, continuing to drive venture funding, but also to improve their go-to-market execution. So we'll touch on this a little bit more when we dive into the vendor scenarios in a few minutes, but in addition to building go-to-market campaigns, we do see these niche vendors trying to poach leadership and executives from some of the mainstream vendors to be able to do so. Overall, we think that the market for flash storage will consolidate over the next several years. Acquisitions are possible, but we believe that this activity will be more limited than we've seen in the past few years. Most of the mainstream vendors already have their key portfolio pieces in place, and so they are going to be less likely, we believe, overall, to acquire any vendors. For any remaining niche vendors, if there will be any acquisition activity by perhaps by some of the larger vendors, we think that, again, looking at those software capabilities for differentiation is likely what will attract potential buyers. In addition to potential acquisition activity, we do think that the market will consolidate as some players, especially some of the smaller players, perhaps are unlikely to be able to keep up. The chart here on this slide ranks vendors across both camps. The vertical or y-axis plots vendors by go-to-market execution, and the horizontal or x-axis plots vendors by their portfolio depth. And you can see on the slide here the first tier leaders, and by that we mean the first really 4 leaders in the space in the upper right-hand corner, are spread across the mainstream and the niche camp. We have EMC, IBM, Pure Storage, and Nimble Storage. When we look at the second tier leaders, or 5 through 8 by rank, these vendors are mainstream vendors. We have Dell, HP, NetApp, and HDS. The up-and-comers, the blue-colored vendors slightly to the right of the second-tier vendors, are niche vendors. And again, you can see here how they're, for the most part, their key weakness would be improving that go-to-market execution. Overall, they have strong innovation, and that we believe will be one area in which they will focus, again, heavily through channel investment. And we'll get into some more specific examples over the next several slides. And with that, I think we can dive into some vendor-specific examples. EMC, we believe, is indeed a leader in the flash marketplace. And we think that one strength EMC has leveraged, in part to build this leadership, is the fact that it's already an incumbent in the storage marketplace. Especially through disk, it's been able to build a reputation for being able to handle very mission-critical workloads for customers that are data-centric. And what it's done is it's kind of built upon this. It has about $6 billion in cash and cash equivalents. So it's been able to apply that to build a very broad portfolio from a flash perspective that's been both through R&D and its acquisitions of XtremIO and DSSD. And this approach in terms of having a broad flash portfolio is very similar to what we've seen EMC do on the disk side. It's really trying to go to market to make sure that all of its bases are covered and that it's able to cover all of customers' workload aspects. One thing we think that is particularly unique about EMC is its federated business structure. So EMC, from a corporate perspective, of course, it has partial ownership over VMware and Pivotal, and what it's trying to do is, as a corporate focus, is go to market with solutions that integrate technologies across those three businesses, especially in some of these key areas that we're looking at here in the flash segment, such as analytics. So while that does add a degree of complexity, both from a portfolio and also from a go-to-market perspective, we do think that creates an opportunity for EMC to build some unique solutions around its flash capabilities. EMC does have penetration and a lot of growth in the flash marketplace. It actually says that Extreme I/O is the fastest growing product line in its history. It closed 2014 with an annualized bookings run rate of more than $1 billion. And also, according to EMC, about 40% of the Fortune 200 are Extreme I/O customers. So we're seeing some relatively broad penetration for EMC, and especially in some of these very large accounts. From a challenges and perhaps a threats perspective, we look at EMC's go-to-market approach, and on one hand, we do see EMC launching campaigns such as competitive buybacks, and it also has a $1 million guarantee for its data services being inline and online with Extreme I/O, and so that shows a lot of strength and confidence from the perspective of EMC and its portfolio. However, we do think that EMC could take steps to better link its technologies back to those business outcomes, again, to really be able to address that hybrid customer base that it will encounter in the flash market. Also, the fact that EMC is such a big leading competitor, and the fact that EMC has been very vocal in the flash marketplace will make it a leading target for its peers really across the spectrum. So that's another challenge that EMC will go up against. For IBM, IBM has some similar strengths as EMC, one of them being its investment campaigns. IBM launched last year a $1 billion investment campaign in flash, so it's certainly not going to be outspent in terms of development by its peers. But another thing that's a bit more unique to EMC is that from a corporate perspective, it's focused on going to market with very strategic campaigns and objectives in areas such as analytics. So we think IBM has an opportunity to link some of these campaigns better back to its flash capabilities. For example, with its Watson business unit, it talks a lot about real-time contextual insights, and we do think that that's very unique to IBM and a differentiator. And so in the flash market, the more that IBM can talk, for example, about how its flash capabilities help customers to get to these insights, we think that that can help IBM to further differentiate in the flash market. And another opportunity we see for IBM is the fact that not only is IBM investing in flash, but it's also investing in software-defined storage. It launched another $1 billion investment campaign in software-defined storage. And so as we were discussing earlier in the conversation that management and data placement will be differentiators for vendors, we think that if IBM can link its flash and software-defined storage stories a little more closely together, it then will be able to differentiate from that respect. IBM has a very partner-focused approach to the storage market. This is a little bit different than what we see IBM leveraging in other areas of its business that are a little more focused on direct sales. IBM is also working to compete on price in the flash marketplace, and we think that this approach will help to broaden IBM's customer base, but we also believe that IBM is open to a degree of counter-positioning and skepticism in the industry. So IBM does have a reputation for high prices, and so that will be a challenge for IBM to overcome, but also from a corporate perspective, it is shifting away from a focus on hardware, and at least from the perspective of delivering pre-integrated solutions. So we think that that could add skepticism in terms of customers and partners may be skeptical around IBM's long-term commitment to the flash space, at least from a hardware perspective. Shifting gears slightly to begin looking at some of the niche vendors in the space. We see Pure Storage also as a leader in the flash market, and one thing we think Pure has done to drive that leadership is the fact that it does focus on data optimization both through the architecture of its solution flash array, but also through capabilities such as I/O scheduling. And so from a flash perspective at least, we believe that this has helped Pure to open up conversations around efficiency and optimization, although of course that's a little bit limited because Pure doesn't also have the disk capabilities as well. That being said, Pure has had great success in the flash market. It grew its revenue and its customer base by triple digits in 2014, and it has gained about $470 million in venture capital funding since October 2009. And this has helped Pure to gain attention and leadership from EMC, NetApp, and Google, to name three. In particular, earlier this year in March, Brian Pawlowski, who is a former senior vice president for NetApp, and he actually created NetApp's flash array product, joined Pure. So in addition to helping to continue to drive Pure's innovation, we think that this leadership coaching can help to improve Pure's go-to-market approach, which is one area in which we think Pure is a bit weak compared to immediate peers, such as Nimble Storage. We think that also another thing Pure is doing to continue to improve the go-to-market approach is it launched its Forever Flash program, which we think will help Pure to not only dig into some competitive items such as improved maintenance pricing, non-disruptive upgrades, longer life cycles, all compared to competitors, but also begin to position these in a real-world context. So linking these to things like downtime and risk of corrupting data. Pure does face a number of threats. The leadership coaching, we believe, makes Pure a target. Also, we think it's especially important that Pure continues to mature from a go-to-market perspective because we see, for example, HP and Dell also messaging its flash solutions as lower cost than disk. So, we think that can help to limit the differentiation there for Pure, as other peers are also talking about this. One other challenge or threat we do see for Pure is the fact that Pure allies with Cisco for converged systems, which it calls FlashStack, and it's questionable where this relationship will go because Cisco itself has entered into the flash space and potentially could be investing more broadly in the storage market as well. So again, it's that relationship could be strained going forward as Cisco itself continues to drive into flash. Nimble Storage is another niche vendor we do see as a leader as well. Nimble takes a slightly different approach. It works to capitalize, as it discusses, on the best of both disk and flash. So its solutions do try to integrate both. And we think that has created the opportunity for Nimble to begin conversations around efficiency and flexibility, and that certainly is a strength for the vendor. It has a number of key technology alliances. It has a reference architecture program called SmartStack, and it allies with a number of vendors, including Cisco, Citrix, Commvault, Microsoft, Oracle, and VMware. Similar to Pure Storage, of course, the relationship with Cisco may become a bit strained going forward. However, the fact that Nimble is trying to have a broad alliance strategy, we think can help from that perspective. We do view Nimble as having an overall mature approach to go-to-market execution compared to some of its pure play peers. It talks about having a lot of success to date in the channel, and it has launched recently a formalized channel program, and we think that will create opportunities for Nimble to continue increasing its leverage of partners in this regard. But on the other hand, we do think that suggests that Nimble likely had limited control over its messaging, and perhaps also limited partner loyalty as well. So again, launching a formalized program we think will really help Nimble to take control over that and continue driving loyalty and leverage with its partners. From a go-to-market perspective, another thing Nimble is doing is it has its adaptive flash program, adaptive flash challenge, excuse me, and this helps to open up conversations around competitive displacements, sort of directly comparing Nimble's technologies to competitors. So again, that's another thing that Nimble can use to open the door for competitive displacement. From the perspective of challenges, Nimble did recently settle a lawsuit with NetApp. This lawsuit was primarily around unfair competition and misappropriation of trade secrets, and this was in part due to hiring of some NetApp employees. And although it's not clear that it was directly related to NetApp's all-flash solution, FlashArray, we do believe that this can create skepticism in the industry, just perhaps around, development and things like that. So it's a challenge that we think Nimble will need to overcome, and that it can do that with some of the things that we've been talking about from a go-to-market perspective. And for Dell, so again, we see Dell as a very strong competitor in the flash market as well. And in particular, we believe that Dell was on the cutting edge in terms of delivering flash solutions that are low priced and really geared towards entry-level to mid-range, entry-level to mid-range customer base, which is really its core customer base. So we believe that that was a very strong approach for Dell. Again, we believe Dell was early with that, and we believe that created a strong opportunity for Dell to drive adoption within accounts in which it had already penetrated. Also, from a broader data center perspective, Dell is very focused on solutions that are very modular and very scalable. And from a flash perspective, we believe that that has also helped Dell to begin to talk about flexibility and simplicity with customers, which are, are two things that are very top of mind for customers overall. We've talked a bit about the channel today, and Dell is also investing in the channel, and it's also making strides in the channel. And in particular, in 2014, Dell generated more than 3,000 new storage orders, and that was due to, again, focus on certifying partners on specific technologies and really incenting its direct sales staff to work with partners. And we believe many of these storage orders were likely in the flash segment as well. Dell had a big flash solution launch last year, so we believe that that was top of mind for Dell and its partners, and that those investments helped Dell to drive its adoption of its flash solutions. Dell also prides itself on its data management and optimization capabilities, and we think that Dell has a strong story from that regard, but we also see a challenge from the perspective of Dell. Dell has a very alliance-heavy approach to software-defined storage, and so as Dell tries to talk about data management, data placement, we think that that can threaten to sort of muddle that messaging and perhaps make it a little bit more difficult for Dell to really identify in the industry where it's adding value. So again, an opportunity where we think Dell can continue working with partners to make sure that that message is very clear. Another potential threat we see lies in the service provider space for Dell. Dell allies with SolidFire to deliver SolidFire's all-flash arrays to service provider customers, and Dell isn't, at least what we've seen, Dell hasn't been very vocal about the partnership, but we think that in the service provider space or other spaces that provide, or that require, very predictable, very scalable performance, environments that are very stringent SLAs, perhaps competitors with stronger organic capabilities might be more attractive to customers in this market. So then just briefly to summarize, looking ahead, we do see flash solutions, adoption of flash solutions to be very focused on mission-critical workloads, This creates a number of challenges, but also opportunities for vendors. So those in the disk segment that have a strong presence there are having to transition their portfolios over to flash, which creates, again, some challenges in terms of being able to pivot that portfolio and that messaging. Also, for some of the newer pure plays, that does create an opportunity for them to penetrate existing installed bases and really grow their market share. Another thing, from more of a technology perspective, we believe that as industry trends will continue driving towards convergence, we talked about how a couple of vendors have some converged systems and reference architectures, and we think that those trends will continue. We also believe in this vein that vendors will have to invest in newer differentiators. Again, we talked a lot about management and data optimization, also from a hardware perspective, working to improve capacity for systems. And we think that these trends will continue. So again, for vendors, making sure that they're able to cover those bases, whether it be through careful alliance strategies from a technology standpoint or also building out their own capabilities, we think that that will continue going forward. And we believe that, again, so flash storage we do believe will become commoditized, and we do believe that competition in this space will be very, very strong. So the opportunity, the window of opportunity is relatively limited. It will be difficult, but again, we think that we have seen a number of opportunities for vendors to really capitalize on this. And with that, we can shift over to take Q&A.
All right, excellent, thank you. So if anybody has any questions, please send them to the Q&A function now, and let's get started. So you mentioned SolidFire. They seem to have an interesting strategy focusing on service providers and hyperscale. Do you have any additional thoughts?
Sure. So from a hyperscale perspective, certainly this has gained initial traction in some of the large cloud service providers. We are seeing interest from this in the smaller service providers as well, and also some large enterprises. So this will create an opportunity for SolidFire to sort of build this pipeline over the next several years. And I think that we believe that SolidFire is building on some core assets. It has a lot of expertise in workloads like, for example, such as VDI, and it's also working to bring to market compatibility guarantees, for example, that will help it to drive competitive displacement.
All right. Next, what exactly is different in DSSD from Extreme I/O? Why did EMC bring it in?
Sure. So DSSD was a very interesting acquisition, and DSSD is a different architecture than Extreme I/O from the perspective of its more rack scale. So I think whereas Extreme I/O can go to market with more of a versatile, for example, block perspective, we're seeing some adoption of Extreme I/O in what were some traditional VMAX accounts, for example. DSSD will be a little bit of a different opportunity, and it will be more in workloads like SAP HANA that require even lower I/O latency, and I think even closer integration with compute, and also a little bit more scalability certainly as well. It was when EMC acquired DSSD last year, they made it very clear that the acquisition was long-term. It was a technology acquisition, and we would expect to be hearing more about DSSD this year, and perhaps even a solution launch. They've been overall pretty quiet about DSSD, but with the potential implications of DSSD helping to improve EMC's penetration in workloads like SAP HANA, we think it will be strategic for EMC.
All right. The next question: what leaders in Flash are most likely to be acquired, and by whom?
So the leaders in Flash that are likely to be acquired, I think that they would overall be the up-and-comers that we see actually, if we can maybe go to slide 7, that might be helpful to be able to see the landscape. So the up-and-comers, such as SolidFire, XIO, they would be likely candidates. Overall, these companies are a little bit smaller than, for example, Nimble and Pure. So from that perspective, they would be a little bit less expensive, a little bit easier for a vendor to acquire them, but we also do see them as overall strong innovators in that they have a lot of assets that they could bring to the table for a potential buyer.
All right, and this is a question referencing slide 4. So which drive type, 10K, 15K, or 7.2K, is expected to have the largest drop?
Yeah, this is Christian Perry. I'll take this question. So I think that when we look out, over the next 3 to 5 years, if we expect, looking at this slide in particular, as we see more mission-critical workloads being shifted over to flash, we would expect that less of those are going to reside on 10K and 15K. Sweet spot may be the SAS 7.2K moving forward. As far as the largest drop, I would have to think that the most expensive drive types here are going to experience that, and so we would expect 15K. However, I don't expect that that there's going to be a substantial drop over the next couple of years, because there's still a level of comfort that customers have with disk, of course, and transitioning over into flash. Before flash is commoditized, which we do expect further out into the future, there is that initial upfront cost. Of course, there's an upfront cost with enterprise-level drives too. I mean, if customers want to obtain that reliability, those really high levels of performance and scalability and error management and all of those great things, they're still going to pay a price for those fast disks, and they'll obtain very similar benefits through flash. So I think it's really going to be a structured sort of decline from the top on down, to where we see a lot of those more moderate type of workload requirements then settling into 7.2K. Now, that's under the assumption that we don't see huge price drops in the 15K and 10K range as a result of further flash adoption. So there's a little bit of a what if here moving forward, but that's from a high level, that's what we would expect 15K to be impacted most moving forward. There's a similar question here. What is the timeline for eliminating 15K, then 10K spinning disk with flash technology? I would expect that if we look at this timeline on this slide, looking out to 2018. I would think mid-2016 to early 2017, I really think that there's going to be a rather dramatic shift off of 15 onto flash by that point. Again, we do expect consolidation in the market. As that happens, I think there are going to be more go-to choices for flash for customers, if you will. As that happens, I think that's where we'll start to see some of the major shifts happening.
All right. And moving on, the next question, can you please expand on flash adoption in the cloud?
Sure, this is Stanley Stevens. I'll take that one. So I think you'll continue to see flash adoption amongst cloud providers. If you look at today, there's a number of cloud providers, whether it's Google, Amazon Web Services, Rackspace, that have adopted or brought flash into their cloud infrastructure. And I think, again, as the hardware vendors continue to evolve flash and bring in additional capabilities around high availability and reliability, you'll continue to see more and more providers utilizing flash as yet another alternative for their storage infrastructure.
Next question, what's your view of an all-flash array versus server-based flash?
Sure, so I think that as we mentioned during the discussion, going forward it's going to be very much about sort of effective use of flash and placing data in the most effective way to really maximize that investment for customers. And when we look at all-flash arrays, I think that these arrays are overall going to be used for workloads that do require fast performance, but perhaps not quite as fast as the server-based flash. So I think we'll see PCIe more in workloads, for example, perhaps such as SAP HANA, that do require fastest performance, lowest latency. And we got a question earlier about EMC's DSSD acquisition, and that's almost to a degree an alternative to server-based flash. So I think perhaps we'll also see other solutions come to the market, for example, DSSD, but perhaps other capabilities as well that, maybe also begin to introduce some alternatives to server-based flash.
Next question. Flash storage vendors will innovate around new differentiators. What are examples of these differentiators?
Sure. So we touched on, I think, some of the software capabilities, whether that be the management and the placement of data, tiering, for example. Again, some of these are newer than others. Tiering, for example, has been around, but I think if you look at Flash, for example, we got the question of Flash being integrated in a cloud environment. As things become a little more distributed, the management is going to be more important. But also, I touched a little bit on capacity as well, and I think from a hardware perspective, I think that capacity will be one area that vendors can differentiate. I think especially that's one area in which Flash is more limited, especially compared to disk. So as vendors can improve the capacity of their solutions, that will help.
So yeah, and one thing I just want to add, when we look at form factors, when we see more 2.5-inch drives, the M2 form factor as well, we expect over time becoming more readily available. But again, that's not something that we see as quite mainstream yet. But again, as more adoption happens, I think that we're going to see not only more form factors, but more data management built into the software management platforms around Flash. There's also a lot of work being done, we know, across not only pure plays, but the mainstream storage vendors as well, across tiering. And the more effective that a storage vendor can tier workloads across both flash and disk, and not even different types of flash and different types of disk within a storage ecosystem, the better differentiated that vendor is going to be. There's still a lot of work to be done because a lot of these various flash types aren't deployed in single environments. And we know that many customers are using single flash types, so there isn't tiering to be done. But we do expect that will pick up over time. As that happens, those software management capabilities to throw certain workloads at different flash types will be critical in helping vendors differentiate. Next question, how do you differentiate the flash array providers that have a proprietary flash implementation from those who use SSDs in their solutions? Do you believe that the marketplace sees or understands any differentiation between the two approaches?
So I think that, again, I think that if you look at sort of the architecture, the hardware architecture, it certainly does make sense, again, going back to making sure that, I/O is very to make sure the I/O performance is very strong, to make sure the data is placed optimally. So I do think that there is, especially today, I think that there is opportunity for vendors to differentiate compared to the two. But again, I think longer term, we'll begin to see, this become even more, we'll begin to see commoditization here, I think, as well. So I think vendors, or customers rather, will see less differentiation from that respect.
All right. Yep. I think we have time for one last question here. What are the best candidate workloads for Flash and workloads not suited for Flash?
Sure. So again, I think that I would describe them as very hot or very active workloads. So again, things like analytics, even things like BDI, for example, I think also are some good workloads for Flash. And I think what we'll see is that disk will be primarily focused on some workloads. For example, backup could be one use case where the data is colder. And disaster recovery, I think, as well, could be another opportunity as well. So again, you know, those workloads that don't require quite the high level of data access will be the better candidates for disk compared to flash.
All right, well, that's all we have time for today. Thank you, Krista, and thank you, Stan and Christian, for your help in the questions here, and thank you, everyone, for sending in your questions. You can follow Krista as well as TBR on the Twitter handles listed here, and please check out our SlideShare and YouTube pages as well. Additionally, before you sign off, we'd like to ask you to take a brief survey so we can help improve our webinars for you guys in the future. We'll leave the chat function open for another 2 minutes. Otherwise, have a great afternoon, and thank you for attending.